Hope you're having a great weekend, right?
Yeah.
Okay, that's perfect. Thank you very much. Yeah, so I just want to really touch on the war. And I'm gonna touch on that mildly, and then also I'm gonna touch on not only the war, but I'm gonna touch on what trades we're meant to take and how there's a possibility that this is gonna impact how this is gonna impact the
Hey, hi.
trades. Hey, how you doing, mate? You good?
Hi, fine.
Perfect. How this is gonna impact how we trade in the near future. And also, the webinar will now be posted. It'll be playback posted on YouTube every Wednesday. So to help everybody that doesn't have what's it called? That doesn't have the membership yet to actually watch the replay on YouTube, and that will be done every Wednesday. And also the webinar link would be sent automatically via emails now, rather than being in a Telegram group. So that's just to make everything automated and ease, the work pressure. And yeah, I want to talk about the war. First of all, what do you guys think about the war that's going on?
You're scared now.
It's scary, right?
Yeah.
And
Looks so scary.
Gold has exploded.
yeah, we already know that gold is gonna keep going higher. And for now, I would suggest we stay away from USD. But one thing though about the war, one thing you have to keep in mind about the war is war is not good, but people generate profit off war. So if this keeps going on, a lot of people are gonna die. So and the market is gonna really act strange. So it's gonna be a very difficult time for us, when we're trading. But gold will keep going up. Gold will keep going up because a lot of people are gonna put their money more into gold. And but with the war stuff, as I think Mukhtar was saying earlier, it's very scary. I mean, personally, I don't have anybody going there, but seeing people posting and all of that. I see the soldiers going to church and all of that, shows how scared they are as well about this, and especially when there's nuke involved. So it's just something to think about, and we should just be grateful. Hopefully this doesn't escalate to the point that we have a third world war, but Iran has slightly threatened the White House that they could attack the White House. So that's something we have to keep in mind. If that happens, then the United States dollar is going to crash. So mostly the economy is going to crash anyway. But hopefully it doesn't get to that point. But we can only hope at the moment and pray for the best. So if anybody has anybody that, that's going to be directly involved, man, my prayers are with you guys. And, please be safe and tell them to be safe. It's no fun killing someone else just because of someone's ego and someone's pride. So, does anybody have anything to say about the war or how they think it's going to affect the market?
Not really. I am thinking it's a trap, man.
You think it's a trap? Why is it a trap?
Like they are just playing with the market.
Yeah, they're playing with the market, but it's not just the market now. They're playing with people's lives. You understand?
Yeah.
The elections are coming in soon. So
yeah.
Have you seen DXY index?
DXY.
Dollar index.
I haven't checked the dollar index, but what's happening with it?
Just check dollar index. 2 days ago, I think it has made a very bullish Anglofin.
Yeah.
Okay. In daily chart.
Okay.
And now dollar is going up.
Okay. So.
Okay.
Yeah.
Dollar is getting strong. And with this war threat and all that thing, again the dollar is coming up only. Dollar should go down as per geopolitical war. Dollar should come down.
Yeah, but what's gonna happen is dollar is gonna fall anyway. They won't have any choice than dollar to fall. Dollar will fall. because what's happening now is a lot of people are not going to be more confident in the dollar anymore. Because think about it, if you're going to war, right? If two countries are going to war, why would you want to invest in somewhere you know that the economy is not going to be stable? As you can see, this is the DXY index, and it's been falling. This is the daily chart. It's been falling since 19th of October. Look,
Yep.
it's been falling. So dollar is going to keep going down. There's no escaping this. And gold will keep going up.
Yeah.
You understand? So I personally feel that this is what Trump is using. You know, Trump is going to get impeached. So he's using these as a diversion. So it will be very difficult to impeach him, you know, when war is going on, because you still need a leader in the country.
Okay.
But it will be very, very difficult to impeach someone when there's war going on, because that makes them vulnerable. You understand what's going on now? So it's a diversion, in my personal opinion. I mean, this is just my own opinion. It's a diversion because at the end of the day, the EU say that don't need war right now. UK doesn't want to go to war. Nobody wants to go to war. And I'll speak to Aslan as well, and he was saying Pakistan as well doesn't want them to fight war on their ground. So why are we fighting? What are we fighting for? That's the question. So I just see it as a diversion. Why is it that when they want to impeach him, that's when he's bringing up war?
Exactly. Yeah.
So it's all a big scam. He doesn't want to lose power. He wants to stay in power. But by staying in power, you're going to kill a lot of people to stay in power. That's not right leadership to me. You understand? That leadership is very, very dangerous. And, you know, we have families on the line, or both ends on the line. And, you know, making a statement that they have invested $2 trillion into military, and you know, they're looking to test it on Iran. You don't understand? That's kind of like a kid talking like, yeah, I have this, I'm boasting about that, I have that, I'll be using it on you. You understand? That's very dangerous. It's very dangerous. And we're not even looking at things going on in Australia. Australia is on fire. It's
Man,
literally on fire.
Yeah, bushfire.
Yeah.
Exactly. A lot of people are dying there. The ecosystem is going off there. You know, not too long ago, last year, Amazon was on fire, and the one in Australia is more bigger than that one. We should be focusing on stuff like that rather than focusing on, you know, killing each other and stuff like that. You know, so personally, logically, it doesn't seem like the wise choice to do to go to war. But regardless of how they put it, you understand, things are gonna go south for both parties, and a lot of innocent people are gonna die in the crossfire. So hopefully they don't start a war. That's the hopeful part. But if a war comes down, if it comes down to a war, the market is not gonna be stable, guys. It's not gonna be very stable to trade. So it's gonna be a very, very risky, you know, market to trade. But there will still be some key components in place. So in the midst of the chaos, there will still be certain stability. But it's gonna be more like a survival of the fittest, because the market itself will be at war as well. So it's going to be something very, very dangerous for everybody. So hopefully we don't see a war. But if there's a war, the only place you can go to is gold. Just put your money in gold. There's no, you know, I don't even think they need to trade Forex. You just put your money in gold and just forget your money in there till the war is over. Yeah, that's the only safe haven I can see happening. I mean, have you guys checked gold? Like literally gold has been going all the way to the roof. And this was expected. This was already expected. It's already done 700 something, and it's still gonna pretty much break through and keep going up, 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 up. You understand? So gold is gonna probably go back to this higher high right here. If this war happens, gold is still gonna do an extra 3,000 pips and probably punch through this.
Yo.
You understand? So that's a lot of money on the table right there. So it's something to consider. So gold keeps going up. But as I said, it's a very scary stuff. So I'll put that aside. We'll move to today's webinar. And last week we did very good in terms of trades. I think there was 5 trades called. All 5 came in, so it was a very profitable week. What I want to do this week is I want to actually capitalize on something Mukhtar actually pointed out. Mukhtar, I don't know how you do this, but you got that magic eye, man. You understand?
Yeah.
Mukhtar found another 100% day for us to trade on. So it's something it's something very nice. I want to see. This is
Mukhtar is having an eagle eye.
Exactly. He got that eagle eye right there, man. You understand? He got that eye to fish for that 100%. And he saw it on NZD CAD. So yeah, NZD CAD was it. Yeah, if I'm not mistaken. And it's actually going to be a long trade. I think personally, it's going to be a long trade. The main reason is because it happens on the 6th. On the 6th trading day, and the 7th we have 66%, 8 we have another 66%, and then another 66% before we get a drop, and then goes back to 66 again. And this has been happening for 12 years straight. So this is 12 years straight, this has been happening. So hopefully this year we're gonna have that 100% not broken and keep going. And especially since it's the middle of the somewhere in between the month, is not at the end, so the probability of this happening is very, very high. Now, if we compare that to what we're seeing on the seasonal chart, and just a point out, if you've not been on the webinar before, we have different ways of analyzing the market. First is the seasonal, then we use the COT reports, which is the commercial information, and then we use probability. And I'll explain those in a moment. So the seasonal first is how the market has moved. The average of the market has moved in amount of years. So in this case, we have the 5 years average, the 15 years average, and the 21 years average. And this is how the market has moved over the season in 21 years, and broken down into 3 categories. So we can see like around January right now, where we are right here on the 7th of January, we see the NZD always going up until the 12th right here, and then everything starts acting weird. So from the 7th to the 12th right there, we should see ideally a up move in the NZD chart. Now, once we've seen this, right, the next thing we do is the COT. And I know guys that have always been on the webinar, bear with me. I know you've seen this over and over again. I just need to keep going over it so it boils down, in the mind. The next thing we check is the COT report. And now we check the COT for
There one more thing.
yes.
Will all the currencies get affected in this war, or
Uh,
only USD pairs?
all the currency will get affected because the economy is chained together. It's a long chain. So, America has trade treaty with so many countries around the world. Understand? And based on that trade treaty, if let's say, for example, America is not buying or consuming, they're one of the biggest consumers in the entire world. They're the biggest consumers anyway. If they're not buying
Okay.
anymore as they used to
Okay.
buy, you understand? So a country that's selling before wouldn't be able to, make that profit because their buyers aren't buying anymore. So it's gonna affect everybody. And if they're selling to America, and America is if America is selling to some people, and because of the war, they're not able to meet up with that sales anymore, it's gonna affect the other countries. So it's literally gonna affect every currency around the table. It's a chain reaction. It's just like the food chain. You understand? If an animal get taken out of the food chain, then the food chain is most likely gonna get disrupted. So that's most likely gonna happen in this instance. So with the war going on with America right now, it's going to definitely affect the market. That's why I said gold will be the safest option to go into, because during times of war, gold always goes up. There's always more demand for gold. So, so the NZD now, we're checking the seasonal. We've checked the seasonal. We've seen that there's an alignment right there on all 3 time frames, which is, if I'm not mistaken, the 5, 15, and the 20 something, or was it 21st? So we've seen that alignment to the upside. All 3 must align before you take any trade. All 3. This is a mandatory part. You cannot, skip this. Every single chart, the 5, 15, and 21 years must be aligned before you even look to take the trade. And it must be long enough to take, not just 1 or 2 days, like small bumps like this. You want something stretchy. And then check the COT report, which is commercial information, what the big banks are doing, the buyers and the sellers are doing. And there hasn't been a new COT report because this one is at the 24th, and a new one should have popped up, if I'm not mistaken, on the 31st. But I think there might have been an holiday. So, so basically, there haven't been an update on that one anyway. So, but right now, what we can see from the previous COT, we can see there's small buying power, but there's a larger selling power. But altogether, there's still much more buying power in the trade. and there's more open interest in terms of liquidity to the upside for this asset. So it's kind of ideally what I want to see is I want to see the long position bigger than the short position. But because the COT hasn't been updated, I'll give it the benefit of the doubt that this figure would be higher. There'll be a much higher change in the NZD. So this kind of moved the trade from a low risk trade to a medium risk trade. Now, knowing the COT and the seasonal lines, the next part you check for is the probability, and which Mukhtar has already checked for us, and he's the one that pointed out this trade anyway. I think is a brilliant trade. And we knowing that the 6th trading day of the month, which is, if I'm not mistaken, the first trading day of the month was the 2nd because we didn't trade on the 1st. Second was the first trading day, second trading day, third trading day, fourth, fourth trading day, fifth, and the 6th trading day will be Thursday. Thank you for saying that. Thursday. So on Thursday, on Thursday is a 100% win day on this asset on NZD CAD. NZD CAD on Thursday, 100%. If you close your eyes as soon as the market open without no stop loss, obviously using a good lot size and using a good, a risk to reward ratio, and not just blowing your account, entering like 50 lots or something on a small account. You understand? Using a good lot size, you would profit 100% on this day towards the buy side. And it hasn't failed for 12 years, so we don't expect it to start failing now, regardless of what's going on around the world. So basically, on this day, we have a best probability of buying. But because we see on the seasonal that on the 7th, we're expecting the move to start changing up, which is 1, 2, 3, 4. That's the 4th trading day of the month. We have a 58% chance of a buy. Now, personally, this is good. Now, the main reason I say this is good is because it's a higher probability. But the only question is the 50. There's a 50%, 50-50 chance after this. Now, there's 2 ways to trade this, right? On this day, you can go in and buy the asset and exit on that same day or exit before this day and then re-enter on the 6th. Understand? We enter the market on the 6th. Or you can be brave enough and hold it from that Tuesday all the way to Friday, because that exit day is on the 12th, and on the 12th is not a trading day, which is on Sunday. It's probably trading at the end about 10 o'clock my time. So personally, I would say you can hold it if your account can carry it. But if you have a small size account, you enter a little bit with position, you exit, then you re-enter on the 6th. Okay. Now, I'm just going to move this quickly to the chart. And am I moving too fast for anybody? If I'm moving too fast, please let me know.
No, you're good.
Okay. All right, perfect. So what I would tend to do is we tend to analyze the chart. I mean, a lot of you are familiar with the monthly average that we do have. And I don't think there's any need for monthly average right now. So what I'm going to do is just going to quickly still make normal basic support and resistance, and stuff. What we can see right here anyway is we can see it's an uptrend, which is good for us. That's what we want to see. And let me just see if I can find a trend. I don't think this is trendy enough, but let me just see. No, I don't want to do the monthly average. I'm just being lazy, guys. I don't want to restart calculating and stuff. Nope, that doesn't look good for me. So we're expecting to buy on a Tuesday, right? So ideally, what we want to see is the market dropping a little bit more on this section right here. Actually, let me do some. Let's load the ATR and see the average. So we know on average, right, in the last 14 candles, we've seen the market moved about 53 pips on average, right? So we don't expect the market to move more than 53 pips in one single day. So the likelihood of the market touching this down point right here is almost next to none. So what I can do right here is, all right. I'm just gonna load up this not day trading, actually support and resistance. PZ support and resistance right here. Let me see what we can find basically. So PZ support and resistance actually, ooh. So price already bounced off the first support point. Now there's a likelihood that price might retest the support right here. And one thing that I skipped, guys, is the Williams. Understand? Do not skip the Williams. You want to see the Williams pointing to the upside. Okay, if the William does not point to the upside, you do not take that trade because we're looking to buy this trade anyway. So the William pointing to the upside is a bonus for us to say, okay, on this asset, I'm definitely going to buy this because the William keeps saying we should go up. So now what I can see from here, from the support and resistance, is basically price has already bounced off a support point already. And what we can see maybe on Tuesdays, price actually start going up. And then on Mondays, price start going up, then bounce back down and probably retest around this area which price open at. Or we could see price come further down to around this zone right here. The main reason I chose here is because price hasn't really tested. It did test it once before. It hasn't really tested it afterwards. So I would probably vote for this point like between here right here for price to come back to before we look for a buy. Now, me doing this is just based on my own logical way of looking at the market. Now, this could be very confusing to a lot of people, especially when you started trading, like, what am I doing here? So I have something else for you guys that's going to help you, work around what I just did right here. And that's what we use. That's why we use the average. So I'm just going to quickly, no, I'm not doing this. I'm just going to quickly delete this right here and if the average true range. And what I'm going to put into the chart right here, and every member already have this. If you're a member, you should have this already. The average. So where's the average? Give me 2 seconds. I'm just looking for the average candle size. Okay, this is weird. I can't find my average. Can anybody see my average on the computer? I can't find my average indicator. Oh, okay, that's it right there. Oh, goddamn. It took me a while to find. Yeah, so for the guys that are new, right? This is what we call the average. And what we do here is we calculate the average wick size, right? The average wick size is basically the size of the wick. And then we use that to estimate how far of a pullback we're expecting. So because we're expecting the market to go up, what we tend to do now is we calculate the average buy wick. And basically what we use that figure to do is we use to plot a support line or entry line, baby. What we call it, entry line. And let me just quickly pull this out like this. So, right, can I no, I want to try to resize this a little bit. So yeah, the average wick size of a buy, I'll calculate down on daily, then I calculate down on weekly, and then I use that to form where my entry is going to be. So the first one is 0 plus 3 plus 4 plus 18 plus 3. I can do 6 in this point because the first one was 0 plus 14. That gives us 42, and I divide that by 6. And that gives me an average of 7 on the daily chart. So I'm looking at 7 pips pullback before I see kind of like an up move. So if I'm not mistaken, from where price is right now, that should be about 7. Yeah, that's about 8, which is fine. And then you go on the weekly chart and you do the same for just the buy candles because we're expecting it to go up this week. So we do 3 plus 1 plus 12 plus 35 plus 10. Since I did 6 in the other one, I'm going to do 6 in this one plus 22. And I divide that by 6. So that gives me 13.8 pips, which is about 14 pips from where price is currently. So if I'm not mistaken, it's very close, to be honest. So I'm just going to go for hours. it's literally around the same point. There's no difference from where it is, to be honest. So we're looking like a pullback from somewhere around there to here. But based on the first analysis that I did, this is more like slightly more beginner stuff with the candle wick average. You can look to buy from around this zone or just be patient and wait here, which is an extra 30 pips. So personally, what I tend to do is I will wait and see how price react around this zone on a Monday. But ideally, I should be looking to buy around here. The main reason I'm choosing here is because there's a consolidation around this area. And any consolidation area, it's a pocket of liquidity. So around here will be ideal for me to buy this asset. Let me just delete this down one. I don't need this anymore. And right here should be where I should buy from. So I want to literally take a buy trade from anywhere within that blue zone and possibly exit somewhere at the top here. It's about 120 pips would be my ideal take profit. So I want to exit somewhere around here. And yeah, so to be on the safer side, you can take the trade on the 6th trading day, which is 2, 3, 4, 5, 6 on a Thursday. But if you're feeling a bit more risky, you can take it on a Tuesday right here on the 7th. But on a Thursday, if you do not want to lose, just take the trade, take the buy trade on Tuesday, on a Thursday. And we know that the average wick size anyway on a daily chart is about 8 to 9 pips, so which isn't bad at all. So you can just take the trade anyway as soon as the market open at that time frame and just wait for it to go in your direction, basically. But I might be in on this trade since Tuesday. So depending on how I feel about it, and I most likely want to exit at the top right here. So about 120 pips for the week should be sufficient enough. Is there any questions?
No.
No.
You sure? I felt like I confused you guys, to be honest.
No.
Like legitimately, I felt like I was going off tangent a little bit, confusing you. So
No, but you were doing good, bro.
oh, okay. Thank you very much, guys. Never expect. If you do have any questions, though, please let me know because we still have quite a few time. You know, we have quite a lot of time in our hands, so we can actually play with that. I mean, I have to give a big thank you to Mukhtar because he just make the work much easier now. Because 100% win day on a Thursday, it's a no-brainer for anybody. And on average, this asset move on a day towards the upside. Let's see, that's how many pips? 48 pips, 39 pips. 35. So we should be expecting about 30 pips plus on that day anyway. 25 pips. So on that Thursday, we should expect at least 30 pips in the upward direction. And I mean, with 30 pips, even if you're trading with one lot, for example, because it's a low risk day, you understand? Even if you trade one lot, that's 300 quid for you. And if you're feeling like a superstar, obviously I don't advise it. Trade with 10 lots, you know, and make $3,000 in your pocket. So, you know, it depends on you, your risk threshold and how big your account is. But this trade definitely is one trade I'm definitely going to look to trade this week. If I have any more trades, I'll most likely post them in the group. But this one is literally that trade. And then the next one I actually want to look at is gold, our buddy right here. Gold is another one I want to look at. And basically gold, I want to trade gold to the upside, but I don't want to risk it because right now, right, what we know from the seasonal is gold is meant to go up. This is what we know from the seasonal. The seasonal was showing us that, let me just load that up. Gold was meant to be going up as far back as the 23rd. And gold is going to go up until the 20th. And probably we could see go even further, but I wouldn't go beyond 28, right? Yeah, around 28. You understand? Right there. So gold is following the seasonal. You've seen the up move that's been doing. I mean, right here, it says between 23rd, we're expecting it to start going up. Let me check when gold started moving up. The 23rd, bang on 23rd, right? As the seasonal said, gold started moving up. And if we took that trade, we'll have made 742 pips. till now. But we didn't take the trade. The main reason is because I'm getting feedback. The main reason we didn't take the trade is because of the trade war that was going on and things were unstable. So I didn't want to risk, I don't want to take the risk, but it looks like a good risk to have taken, but I don't really mind. We've made so much money out of all the trades anyway, so it's not a big deal. But we can still take it, but if you get it wrong, it will punish your account. So I would wait. What I'll wait is a sort of pullback. Gold does not do much pullback when it's trending. You should know this. When gold is trending, it really doesn't really care. It doesn't really pull back that much. And I'm not as reckless like to jump on a trade that's already trending. So I would wait adequately for a pullback, maybe somewhere around this zone right here. Around this zone right here, the breakout zone. Let me just pull that down. Around here, anywhere around there, that's even, to me, that's even still risky. I want here. And the main reason I'm choosing here is I'm choosing this top, this breakout section. Price hasn't retested this yet. I don't see price dropping to this level. Nah, not anytime soon because of the war that's going on. The more the war goes on, the more gold is going to go up. So I expect gold to come somewhere around here to retest here. Then I would then take the trade to the buy side. But without gold going to this side, I'll just let the trade go. And what I would do is I'll wait for gold to around here in April. And short it in April. I short it in April to around May. And then re-enter in June. In June, July. Basically, enter it in July and trade it back up. But we've kind of missed most of the chunk of the up move right now that's happening. So it's not a big deal. We've made money on other trades, but looking to short it around here. So if next week, by any chance, gold manages to drop to this zone and anybody notice, please let me know because I want to check this trade too. It's a good trade to take, and if not, we still have NZD CAD to focus on and then take that trade. Okay. I just thought I'd touch on gold.
Thanks a lot.
No problem. Is there any questions?
No.
Okay, which is good then. The playback will be available on YouTube. I mean, the YouTube channel is new. I just created it, and it's very new. I'm trying to rebrand it to make everything much easier and more comfortable for everybody. So, if you can please give us a subscribe on YouTube, that'll be fine. That'll be perfectly appreciated. We have a Twitter account as well, which is just created. We don't have much followers yet, so we're just starting very small. And if you can also give a follow on Twitter, that'll be perfectly fine. That'll be perfectly appreciated. I'll post the YouTube and Twitter again into the chart. And if you followed and you've already given us a subscribe, I really do appreciate you. Thank you very much. God bless you. And if you know anybody that's going to benefit from the group, just bring them down anyway. It doesn't matter. I mean, it's free stuff. Unless you want to go for the professional stuff, which is then you pay for it. But with this one, it's free. You guys can at least get to, benefit from the system regardless. So that's really what I want to say. I want to try to get the YouTube channel to 100 subscribers so we can brand the channel. We need the channel to be branded in the company's name so nobody hijacks it off, the company. So that would be wonderful if we can take that before that time. So that would be perfect. So the YouTube, let me just see. Let me quickly pop on the YouTube. Let me pop on the Twitter first. So the Twitter is right here. It's new. The Twitter is called DAMEMPIRE Forex. So the URL is right there. This is it. It's 8 followers. Oh, it's grown. Thank you very much for the 8 people that followed already. Really do appreciate you guys. It's very new. And the YouTube as well. I think we're growing that little by little. So basically, I want to try to get the YouTube to at least. Oh shit. I want to try to get the YouTube to at least 100 subscribers. So if you can subscribe, that would be very perfect for the team.
Already done.
Thank you very much. I really do appreciate it.
Yeah.
I do appreciate that a lot. So if we can get that, that would be great. And if you guys have any suggestions for the group, for the business and whatever you need, just let me know. Definitely the webinar, this video will be the first to go up on YouTube for everybody to watch. And then when it comes up as well, if you can share, that would be wonderful. You understand? That would be wonderful. So we can get the growth coming. So on that case, guys, that's basically the webinar. And if you are in the zone that they're gonna fight war in, please be safe. Understand? Please be very safe. You know, if you have to move away from the country, please do. Understand? You know, don't. And if you have family there, you know, move away. Don't take the risk and just stay around or hang around. You know, anything could go wrong. So at this state, and for the soldiers that are going to fight for us, man, and going to fight on both sides, because I'm not taking sides in this. I see this as pointless. Understand? But for the soldiers on both sides, man, may God be with them all and you know, protect them all in this battle. So. Yeah, that's it for today, guys. And I really do appreciate you guys for turning up. It really means a lot to me. And yeah, let's make some money this week, regardless of what's going on. Let's make some big ass money, man. All right. Okay.
All right, bro. Thank you.
All right.
Thank you very much, guys, for attending, man. God bless you all. And I'll see you in the group. If you have any questions, just post it in the group and I'll go through it with you. Yeah. Thank you very much. Have a lovely evening. All right. Take care of yourself and your family, okay? Bye.
Bye.
Mm.